the question that we're looking to answer is, how do we get here and what are the key milestones along the way? So from my perspective, obviously the white paper that Satoshi wrote, who I believe is a singular individual rather than a group of people, was an innovation rather than an invention. That is to say, it was built upon the work of others, and he referenced them in the white paper. And what it enabled was quite simply a censorship-resistant currency that is protected by cryptography through a proof of work that is the contribution of power from compute to a global distributed ledger. Now, that sounds awfully fancy. What it really enabled is a store of value that is independent of any nation state. That is the key innovation, and the state of that ledger can be maintained by people who run the software anywhere in the world. And because of the fact that it is free, open source software, it is protected by free speech. And if you run good OPSEC, you also have the benefits of privacy if you are careful to utilize the technology in the right way. Now, again, the narrative that surrounded that was response to the global financial crisis. And that is directly referenced in the Genesis block of Bitcoin, which says, from the London Times, Chancellor on brink of second bailout. The invisible hand of government, in this case, was being influenced by corporations, in this particular instance, the banks, who were being offered a bailout that was a second bailout that was patently unfair to those that had not taken egregious risk in the global financial crisis, that was being very clearly put at the door of bankers who had been inflating the value of assets and had allowed for runaway speculation to bring the world to the brink of complete collapse. Now, that does not mean that Satoshi had been thinking about a system that could be independent of the influence of both government and of corporations, and be running a peer-to-peer system that enabled everybody to maintain the state of the ledger, and therefore create a new form of currency that would be independent of anybody's influence and independent of any censorship. This is what is ushered in 2009 and is then basically discovered variously by cypherpunks and cryptographers, and then spreads to others, started to realize that this idea had power. It gave people belief that there was a new way to create value and to maintain value. And that value, store of value, is the key idea that I think Bitcoin represents. Other people wanted it represent the other features of money, which are medium of exchange and unit of account. I do believe that the white paper is geared towards being a medium of exchange as well, because it talks about peer-to-peer cash. However, Bitcoin, because of its value growing from 0 to 70,000 odd, has meant that it is not really a very good medium of exchange, because people do not want to exchange an asset that increases in value and decreases in value. But so, like holding gold that you believe to be a hedge against the devaluation of currencies, Bitcoin has become more accepted. Elon Musk brought it to the consciousness of the world in terms of putting it on the Tesla balance sheet. And then Michael Saylor, who adopted Bitcoin and put it into his corporate structure that, again, gave it features of a unit of account as well as a store of value. And finally, the acceptance of Bitcoin as an ETF. However, in many ways, the acceptance of Bitcoin into the mainstream ETF world and corporate world removes a great deal of the original attraction that Satoshi designed in terms of the censorship resistance, because once Bitcoin is held by an ETF or held by a company such as MicroStrategy, it clearly is no longer censorship resistant. It may be censorship resistant in and of itself, but by virtue of the corporation being regulated by the SEC, it means that Bitcoin is subject to government censorship or government control via the control of the corporations that hold it. So it's been a long arc for Bitcoin. It has now gained greater acceptance and fulfills the three core criteria of money. However, it has lost many of its cypherpunk credentials, and it has ossified in terms of the user's ability to interact with the protocol directly. But this is the nature of the desire of the holders of Bitcoin to see the number go up. So there are, so many competing dynamics, and this is why I'm pretty confident that Satoshi understood this, because he is a master of probabilistic Bayesian mathematics and game theory, and he understood pretty well that the number go up would create a stochastic shock, especially as there was a large amount that was mined by Satoshi to create this bump in the supply-demand dynamics that would create a positive skew if people adopted it and it became exciting, which it did. And that would create a large group of adherents and followers, sometimes called maximalists, who believe deeply in the principles, believe deeply in Bitcoin as a censorship-resistant currency that could offer a different way for the world to evolve financially, away from government and away from the control of corporations, etc. However, as it was led by one individual who then resigned from role of development and it was handed over to core developers, they have typically been afraid to make too many improvements to the protocol. And that is not necessarily bad, because the innovation in itself effectively birthed the industry that we now know as blockchain. That would be a fast summary of the what, why, when, how, and who of Bitcoin. What happens when a protocol ossifies, where you don't get a lot of innovation, you don't get a lot of easy acceptance by the group for change, because if it ain't broke, why fix it? So anyone who picked up Bitcoin in the cents rather than in the dollars or thousands of dollars is not going to have a great incentive to make large changes to the way that the system works. And remember, there is a big divergence between those people who really understand the protocol from a mathematical, technological, cryptographic perspective, and those people who believe to have Bitcoin as a faith, who are the mimetic followers. Those people have a big incentive to not rock the boat. From that came Ethereum, essentially. And Ethereum birthed a number of innovations. This is where one has to believe that Satoshi understood that smart people like Vitalik Buterin would come along. However, the origin story of Ethereum is not quite as pure as Bitcoin, because there was a pre-allocation to the founder group, and there was an initial coin offering, which created a whole lot of uncertainty around whether, in fact, Ethereum was a security under US law, or whether it was a commodity. The original way that they chose to regard Ethereum was as a world computer called the Ethereum virtual machine, and that this would be the evolution of Bitcoin, and it would enable people to have more use than the Bitcoin blockchain. The first major use case for Ethereum that became well known was known as the ICO, the initial coin offering. And so in 2016, 17, 18, there was this enormous explosion of excitement amongst application developers rather than protocol developers, who were able to, quite frankly, get rich quick by creating what financial people would regard as a pink sheet IPO. So that's a very low grade initial public offering. And this created massive wave of excitement and interest amongst speculators, especially younger people who didn't have access to the IPO market. And they were able to participate in this boom where you would be able to buy a token and it would shoot up from 0 to 100 or 0 to 1. And if you got in early, you could make a good amount of return for your speculation, which brought the ICO market to the attention of the regulators. Most of these guys either stole or misallocated the proceeds of these token launches. These large promises obviously attracted the attention of the SEC. If you are selling unregistered securities, you are breaking the law. And they went after a number of these people, and that was the end of the ICO boom. But it also led to a lot of EVM clones. So the emergence not of tokens, but of other coins that were using the Ethereum virtual machine model to launch their own protocols. We consider layer 0 to be cross-chain protocols, layer 1 to be blockchain protocols, layer 2 to be scaling solutions. So that's sort of the structure of how Bitcoin birthed Ethereum. Ethereum birthed the EVM layer 1 clones and some others who have a different consensus mechanism. And the next wave was really DeFi summer, which became popular during COVID. COVID just created massive amounts of innovation in the digital realm. When it seemed so threatening and so dangerous, the government then came in and issued an enormous amount of liquidity into the market. If the GFC created the opportunity for Bitcoin, COVID really created the opportunity for the DeFi summer and for wider adoption of cryptocurrencies. Instead of thinking of it as decentralized finance, you could think of it as derivative finance, because really what people were involved in was high-level speculation and playing a game that was really Ponzi-nomics on speed that was taking place on the Ethereum ecosystem. And at the tail end of that, where you had lots of people online, lots of free time, lots of Zooming, lots of social audio, lots of social media, and also a lot of money because people were not spending. After DeFi summer came the NFT craze, which NFT stands for non-fungible tokens. You are buying a one of one or one of a limited number of editions of art. And so art is a representation of culture. So again, it's mimetic. So what we're seeing during this time is that the meme becomes more powerful. Now we see that the NFT boom is all but dead, with prices now 90% down from their all-time highs. And again, these are waves of speculation. Now we're in what we would consider to be the next generation that is effectively more accepted version of what is going to be the future. And the biggest emerging sector has been that of the stable coin. The stable coin is effectively a dollar derivative that is held notionally 1-for-1. So you have a dollar represented by a dollar in the bank that is a way to access a stable coin called USDT, which is created and owned by a group called Tether. That is the largest stable coin in the world. It then spurred a wave of adoption, of course, because you need to get money into the system in order for the protocols to grow. And then a chap called Jeremy Allaire created a business called Circle, and Circle has a plethora of institutional players, including, I believe, Goldman Sachs, and I believe BlackRock, where BlackRock holds $500 million worth of assets on behalf of Circle. And perversely, the stablecoins that are the largest are dollar stablecoins. So the irony of Satoshi building a system that enables peer-to-peer electronic cash is that entrepreneurs, predominantly, some more institutional than others, have ushered in the institutional acceptability of digital currencies. And in that regard, what we see is that in the same way as we used to have fixed line telephony and voice over IP with Skype and now WhatsApp and Telegram and Signal and all of these other services basically mean that nobody picks up a regular landline to make an international call. It is much cheaper to use voice over IP. One can think of digital currencies as now being in the era of value over IP. And so this is the era we are now in, and that is accompanied by a suite of legislation. In the US, the legislator has been less welcoming towards the digital asset arena. It controls the vast majority of the capital markets business. And so there is much more of a desire for the US to protect those markets. And obviously, the dollar occupies the position as reserve currency of the global financial world. So if you can issue money, you can create money, you can export that all over the world, you can exert a great deal of influence, which is known as soft diplomacy or financial diplomacy. The Europeans had nothing to lose, really, because their markets are very small. People who want to make an impact in the world want to ring the bell in New York. So the smart thing that the Europeans did is they created this legislative agenda called MiCA, M-I-C-A, and they have laid down the law for acceptance of digital assets and a framework for issuing digital assets, and have offered somewhat open arms to innovators. And Ethereum has led to a lot of great innovation, but innovation that has enabled it to grow, but it's grown into a Frankenstein's monster because they didn't really know what they were designing. They were just creating a sandbox for people to speculate, and there was an incentive to speculate. And so people speculated. And so if you realize that it's about value over IP, and we're talking about the internet of value, then there will be a multitude of approaches where people will store value, but that value will be about interoperability because that's what the internet's about. It's not about, when you're talking about money and you're talking about liquidity, liquidity has to pool to be valuable. And the largest pools are going to be those that are cheaper, faster, and the most secure, because people do not like their money being in any way insecure. And so the problem for Ethereum is the history of hacking and loss and smart contracts that are insecure. And then fundamentally, the problem of market abuse. I don't see how the regulator, whilst it may allow and agree that Ethereum is a commodity, they will not allow traders to trade in such a way that they disadvantage others. That's just unacceptable. And I think that's probably where we'll leave it today.